Hello, everyone, and welcome to another great show we have for you this week. We'll be going over the Chapter 7 PowerPoint. First, I want to say I hope that you are all healthy and you're staying safe in these crazy times right now. If you ever need anything, please let me know. This week, your attendance grade will work a little differently than it did a couple weeks ago. Last time you watched a video, all you had to do was reply saying that you watched the video. This time, I need you to fill out the classwork as we do it throughout the video and then submit it. Only because this is one of the chapters that you really do need to practice and follow along in order to understand that. You just have to download it in Canvas and then submit it in Canvas. I will show you how to do that. It's located right here where it says PowerPoint Video and Classwork 7, right where you're watching the video at. The video is not available yet because I'm obviously still in the process of recording it, but the video would be here by the time you open it. Download the Classwork file 7 here. So just click on it and then you can download it. Watch the PowerPoint video. We're going to be going over it together just like we would normally do in class. Follow along and fill in the classwork document, whether you do it online or if you print it, whichever, it doesn't really make a difference. And then just make sure you upload it here so I know you completed it. You would just click Submit Assignment. Choose the file, whether it's a picture or a Microsoft Word document. You would just find the file here. Make sure you're not uploading a blank one, that it is the one you completed. And then you would just hit Submit Assignment. This week we'll be discussing Chapter 7, Accounting Information Systems. The agenda for this lesson first is Subsidiary Ledgers, which is pretty simple to do. Next, we'll be discussing special journals, which is the bulk of this chapter. And lastly, we'll just wrap up with accounting information system basics and just some informative information about accounting systems. First, we will begin by discussing subsidiary ledgers. The two most common accounts to use subsidiary ledgers for are accounts receivable and accounts payable. What we have been doing all semester is merely just writing down accounts receivable or accounts payable when someone owes us money or when we owe them money. But think of a large company like Amazon or Walmart. They may have hundreds, if not thousands, of accounts receivable customers or accounts receivable suppliers. How would they be able to distinguish among the different people and the different accounts and businesses if it's all grouped together? That's where the subsidiary ledgers come into play. We're still going to have the accounts receivable and accounts payable counts as our main controlling accounts. However, we're going to subdivide those control accounts among all the different people or businesses who owe us money or we owe money to. There are other accounts we can use subsidiary ledgers for, such as inventory, but we're really just going to be focusing on accounts receivable and accounts payable for this chapter. This is a nice visual on what subsidiary ledgers look like. For accounts receivable, we still have our main control account right here. And like I said, it's divided amongst the different customers who owe us money. So we have customer A and customer B. Throughout the month, we're going to be updating the ledger accounts of these customers. And then at the end of the month, we're going to put the total into the accounts receivable main control account. So let's say customer and A and B both owe us $100 each. So the main control account would be $200. Same thing is true for the accounts payable ledger. We have different creditors who we owe money to. We'll be putting in their balances all month long, and then at the end of the month, we'll update the main control account. Let's do an example together. We have 3 different accounts receivable accounts. These are 3 different people who owe us money. First, we have Aaron Co., and these subsidiary ledgers are already filled in for us. As you can see, on January 10th, Aaron Co. had owed us $6,000. So their balance was $6,000. Remember, this is a general ledger account. So every account is divided amongst itself. They're all listed individually. And we do have a balance of that account. All right, on the 19th, they paid off 4. Remember, a credit to an accounts receivable account will reduce the credit. So in total, in this red color, they owe us $2,000 by the end of the month. Next, we have Brandon Inc. On the 12th, they owed us 3, so they owed us 3. On the 21st, they paid it all off, so they owe us nothing. Lastly, we have Care & Co. On the 20th, they owed us $3,000, so that's the balance. On the 29th, they paid off $1,000, so by the end of the month, they only owe us $2,000. What we need to do is at the end of the month, update the main control accounts. We have the accounts receivable control account here, and the dates are already put in. As you can see, it's January 31st because it's going to be the end of the month. Like I said, this is very simple to do. First thing you want to do besides putting in the dates is add up all the debits of all of our accounts. So all of the debits here we want to add up, and we're just going to make one entry. 6,000 plus 3,000 plus 3,000, and you add that up, that's 12,000. So we're going to just make one entry here into the debit spot of 12,000, and then update the balance as 12,000. This is assuming there was nothing prior. That's step 1. Step 2 would be to then add up all the credits. So here's all the credits. We have 4,000, 3,000, and 1,000. When you add that up, you get 8,000. So basically throughout the month of January, we were owed 12,000 and then paid off 8. So what's our final balance? We were only owed $4,000 by the end of the month. We can double check our work by adding up the balances of all the accounts. Air & Co. owes us $2,000, Branded Inc. owes us nothing, and Care & Co. owes us $2,000. When you add these up, we get 4,000, which equals our balance here of 4,000. That's how we know we did this correctly. Next, we have the classwork number 1 problem. Since you have to turn this in, make sure you have it out, and then we're doing this together. Following are the accounts receivable ledgers from Frederickson Company. Post the accounts receivable balance listed in the general ledger at month's end. So like I said here, all we have to do is update the main accounts receivable ledger account. Just as an FYI for your homework, you do have to fill in the subsidiary ledgers as well. Okay. First, it's going to be the last day of the month, right? So we're in the month of January. So what's the last day? The 31st. Good. Just like the last problem we had. So put in 131. What was the first step that we need to do? Add up all the debits. Add up all these debits, and what do you get when you add it up? When we add the 3 up, we get 8,100. So we'll put 8,100 in the debit box. And then in the balance box, we just put the 8,100. Once again, that's assuming that there's nothing prior to this. What's step 2? Add up all the credits. You have 2,000 plus 1,300 plus 1,600. You should have gotten 4,900. The balance will be the difference between the two. We were owed 8,100, but paid off 4,900. When you subtract them, we get 3,200. This is the balance of what we're owed. And once again, we do want to double check to make sure we're right by adding up all the balances. We have 2,000, 1,200, and 0. When we add the 3 up, we get 3,200. So we know we are correct. And that's it for the subsidiary ledgers. They're pretty simple to do. Like I said, for your homework, you might have to fill in these as well, but it's still not something that's too difficult to do. Also, we were dealing with the accounts receivable ledgers here. Accounts receivable does have a debit balance. Say we were doing accounts payable has a credit balance. So instead of doing the debit first, you would be doing the credit first, and then you'd be offsetting your debt with the debit. So it would kind of be backwards here because we're looking at a different account. So I just wanted to make sure you were all aware of that. Next, we will discuss special journals. A special journal is useful in the manual accounting system to reduce the tedious task of recording both the debit and credit account names and the amounts. Please note that we will only be using special journals here in Chapter 7. After Chapter 7, we will be journalizing the way we've been all semester long. This is because the benefits of using the special journal instead of the general regular journal for the repetitive transactions have been kind of eliminated with today's technology of accounting software. For example, when you put a sale in, all of the accounts would automatically be updated. The ledger accounts and the subsidiary accounts would be automatic, where in cases of doing everything by hand, manual, you would have to do it all yourself, which this is very helpful for, but a lot of people really aren't doing that. Let's say you open your own little business and you don't feel like paying for QuickBooks or any of the other software. You just want to do things in Excel or by hand. And I do have clients who do things by hand in an Excel. Then this would be something that's more appropriate. So this still is very beneficial to learn, but I believe in the future it will become obsolete and outdated. There are 4 special journals that we're going to be covering. The first one is the cash receipts journal. Now, cash receipts means like all the cash we're receiving. Think receipts, receiving. Everyone always thinks receipts as you're paying for something, but that's not true. A cash receipt would be receiving cash. So anytime we're receiving cash for whatever the reason, we'll go into this first special journal, the cash receipts journal. If we're receiving cash because we made a sale, if someone owed us money and they're paying us, if we sold a building or a piece of land, anytime we're receiving cash, it will go here, regardless of the reason. On the other hand, the second special journal would be the cash disbursements. These are the cash payments. So sometimes it's also called the cash payments journal. All cash paid regardless of the reason, whether we're purchasing supplies, whether we're paying off debt, paying for an expense, buying a car, it doesn't matter. If we're paying cash, it's going to go into the cash disbursements journal. The third journal we have is the sales journal. This is non-cash. So the next 2 we're going to talk about are non-cash because the first and second one are the cash ones. So these are sales on account. Sales of merchandise on account. Like I said, if we make a sale and it's cash, it's going to go into the cash receipts one. So this is a sale on account. The fourth special journal would be the purchases journal. All purchases on account. So if we make a purchase and it's cash, it will go into the cash disbursements journal. But if we make a purchase on account, it's going to go into the purchases journal. So that's the main difference between these. We have the cash ones and then we have the non-cash ones. There's going to be times where we're going to have transactions that don't fit into one of these special journals. Maybe we're correcting an entry or we're returning a purchase and it didn't involve cash. Then we would just put this into the general journal. This means that we still have our regular journal. We just have these 4 on the side. We still have our regular journal for all the transactions that don't fit into one of these special journals. Therefore, we really have 5 journals. 4 of them are special and 1 of them is regular. Please follow along with your classwork. This is problem number 2. We have Wilcox Electronics uses a sales journal, the purchases journal, cash receipts, and cash disbursements journal, and the regular general journal as well. Wilcox recently completed the following transactions. Identify which journal it should be recorded in. This should really be your first step anytime you do a problem where you have to use a special journal. The first thing to do is ask yourself which journal would it belong in. If it's cash, it's going to go into one of the 2 cash ones, cash receipts or disbursements. If it's non-cash, it would either be the sales or purchases. If it's not a sale or purchase, then the final one by default would be the general journal. For part A, sold merchandise on credit. Is there cash involved? No, because it says on credit. And we sold merchandise. It was a sale. Therefore, it would be the sales journal. I always ask myself, is it cash first? If so, I go into one of the cash ones and I just stop there. If not, I'll move down to the rest of them. Part B, purchase shop supplies on credit. Now it says on credit, so would that be cash? No, it would not be cash. Then we would move down to one of the other ones, the sales or purchases. Is it a sale or purchase? It says purchased, so we will put it into the purchases journal. C, paid an employee's salary in cash. Does it involve cash? Yes, it does. It says in cash. Are we receiving the cash or are we paying the cash? It says that we paid it. Therefore, if we paid it, it would be the cash disbursements journal. Borrowed cash from the bank. Does it involve cash? Yes, it does. Are we receiving the cash or are we spending the cash? If we borrowed money from the bank, then we would be receiving the cash. Therefore, it'd be the cash receipts journal, CR. Sold merchandise for cash. Which one do you think this would belong in? Was it cash? Yes, it says it. Sold merchandise for cash. Are we receiving the cash or spending it? If we sold merchandise, then we would be receiving the cash. It would be the cash receipts journal. F, purchase merchandise on credit. Is it involving cash? No, because it says on credit. Purchase merchandise. Which account do you think that would belong in? The purchases one. Good job. Purchased inventory for cash. It involves cash. It's going to be the cash receipts or cash disbursements. And we purchased inventory. If we're buying inventory, then we're spending cash. It would be cash disbursements. H, paid cash to a creditor. Which one do you think this would be? It would be cash disbursements. I hope you got that one right. It involves cash and we're spending it. We're spending cash, so it would be cash disbursements. This really is the first step we should be doing. When we look at entries, we need to be asking ourselves, which journal does it belong in? Next, we're going to be going through the 4 different special journals individually and doing practice problems, the classwork, with each of these journals, and you can see what it looks like. I have practice problem number 3 opened right now. The easiest thing to do is to figure out which special journal these items belong to first, and then we'll be covering them individually. On April 2nd, purchased $15,300 worth of merchandise on credit. Which journal would this belong into? Does it involve cash? No, it doesn't. It's on credit, and we made a purchase, therefore this would be the purchases journal. April 3rd, sold merchandise on credit. Does it involve cash? No, we sold merchandise, therefore it would be in the sales journal. April 5th, we issued a check, which means we paid someone. So if we paid someone, it would be cash if we are issuing a check. Therefore, it'd be cash disbursements. The 12th, sold merchandise on credit. It's on credit, therefore we know it's not one of the cash ones, and we sold it. It's a sale. The 13th, received payment. If we're receiving payment, which one do you think it would belong in? It would be cash receipts. The 16th, issued a check. Same thing as the 5th, we're issuing a check. If we're issuing a check, we're paying, it would be cash disbursements. What you really should do is pause this video and try to figure out what the other 3 ones would be, and then see if you are correct. On the 17th, purchased $11,500 of merchandise on credit. We made a purchase. It would be a purchase one. It wasn't cash, it was on credit. The 18th, Borrowed $73,000 cash. We borrowed cash. Does it involve cash? Yes, it does. Are we receiving it or paying it? We're receiving it. So it would be cash receipts. Lastly, on the 23rd, received an $800 credit memo from Grant Company for the return of defective merchandise. While defective merchandise, we're not getting cash here, we're getting a credit. It would not be one of the cash ones. Are we making a purchase? No. Are we making a sale? No. We did make a purchase, but we're receiving credit for returning something from the purchase. It doesn't belong into any of them. This here would go into just a regular general journal. The first journal we're going to look at is the sales journal. We'll be going over this one individually, and we'll be doing the two transactions that go here, the 3rd and the 12th. This is what the sales journal looks like. It's set up differently than what your other journals have looked like in the past. Instead of putting all the accounts out along the side and then the amounts, all the accounts are listed across the top. We still have the date as our first column, account debited, invoice number, accounts receivable debit, and then sales credit all in one box, and then cost of goods sold debit and inventory credit all in one box. The sales would go here instead of listing the sale as accounts receivable and then sales separately on the left-hand side. They're across the top now. This makes it a lot easier to journalize. For example, on the 3rd, sold merchandise on credit to Paige Alastair, invoice number 760 for $5,200. The cost to us was $2,300. What this journal entry would normally look like is the following. The normal journal entry of a sale would be 4 lines. It's 2 different entries. We have on 3rd the actual sale. It's on account. It would be accounts receivable of $5,200. The credit would be sales revenue of $5,200. We have to account for the merchandise we're selling. The second entry for the same transaction would be cost of goods sold for our cost, which would be $2,300. And the credit would be merchandise inventory of $2,300. That's what it would look like. This was on your last test. It's very lengthy to do. It takes up 4 lines. Instead, the special journal makes this really easy by giving us this entry already, the 2 account names, account receivable debit, sales revenue as a credit. And it gives us this entry as well, cost of goods sold as a debit and merchandise inventory as a credit. What we need to do is really just fill in the amount. To begin, we would put April 3rd in as the date. The invoice number was 760. We'll put that here. Skip account debited for now. As you can see, here's the first entry. Accounts receivable debit, sales credit. The amount was $5,200. We didn't have to write out the account names. It was given to us already. We had $5,200 as a debit to accounts receivable and $5,200 as a credit to sales revenue. Cost of goods sold, the debit was $2,300 and inventory, the credit was $2,300. We just have to put the amount in the box, making this a lot easier. We don't have to write out all 4 lines or all the entries. We just have to put the amount in the box. Now, when it says account debited, it doesn't mean the debit like accounts receivable and cost of goods sold. That's already here. When it asks for account debited, it means who is the customer, the accounts receivable, who owes us money here, because we want to start keeping track. That's why we use the subsidiary ledgers at the beginning of this chapter, because we're going to be keeping track of these clients who owe us money separately. The person who owes us money is Paige Alastair, and we would just write that in. The next entry we'd have for the sales journal was from the 12th. Sold merchandise on credit to Paula Core, invoice 761 for 8,300. The cost is 7,600. We're going to be filling this in exactly the same way for 12. Invoice number 761. The accounts receivable debit and sales credit, that was the sale portion. That's the 8,300. The cost of goods sold debit and inventory credit was the cost to us, which is 7,600. And we just have to put the amount like that, making this journal entry so much easier to do. The account debited, who's the person, it would be Paula Core. The sales journal is one of the easier ones to do. These are the two entries that would go here. What you would do then is at the end of the month, you would total these columns, 52 plus 8,300. It would be 13,500. Let's add up the next column. 2,300 plus 7,600 would be 9,900. In real life, what you would be doing now at the end of the month is you would be going to the accounts receivable debit account to the different customers, making sure that that's posted there to those accounts. They kind of already should be. Updating the main control account. You would be posting the 13,500 as a credit to sales. You would be posting 9,900 as a debit to cost of goods sold and a credit to inventory. Instead of going into these ledger accounts every single time we had a transaction that involved it, we would just be doing it once at the end of the month. It frees up space in the ledger accounts by only having transactions posted once per month instead of constantly throughout the day. I know with this example, there's only 2, but just imagine hundreds of transactions that are happening throughout the month. We would just be posting them here into this journal. Instead of going into the ledger immediately, we would just be waiting until the end of the month to do that. Next, we will discuss the purchases journal. For the purchases journal, we have the date column, the account column. Terms would be terms of the purchase if there's a discount being offered, such as 2, 10, and 30. Accounts payable will get the credit. Since this is the purchases journal, this would mean that any purchase on account would go here, which means you always have to be using the accounts payable credit column. If you're not using this column, then you're using the wrong journal. Next, we have inventory debit. We would use this if we purchase inventory on account. Inventory would get the debit, accounts payable would get the credit. Let's say we made a different purchase on account. If we used a different account besides inventory, we would just use the other accounts column instead. For example, if we bought supplies on account, we'd be using supplies as the debit, accounts payable would be the credit. We wouldn't use the inventory one. We would just write the amount here of how many supplies we purchased. And then we would also write supplies over here in the account column so that we know which account we're using. Also, the account payable, the name of the business that we owe money to, would also go into the account column. The 2 entries that we have listed for the purchases journal would be on April 2nd, the purchase of 15,300 of merchandise on account, and then on the 17th. Therefore, these are the 2 entries we're going to be putting into the purchases journal right now. Also note that the terms of all its credit sales are 2, 10, and 30. We're just going to assume it means credit sales and purchases, that there's a 2% discount if we pay in 10 days. Otherwise, there's no discount. The net amount would be due in 30 days. The first entry we have is April 2nd. Purchase $15,300 worth of merchandise on credit from Knopf Company. The normal journal entry would be an inventory debit of $15,300 and accounts payable credit of $15,300. We do not have to write the account names out because they're already listed at the top for us. We just need to put in the amounts. Inventory debit would be $15,300. We're just going to write in the amount. We do not need to write the account name. It's already there. The debit would be accounts payable credit. We're not using the other account because inventory is already listed for us. It would be if we had to use something other than inventory. The account name, it would be whoever the business is that we owe money to. In this case, it would be not company. The terms I listed for you before, I showed you, it was 210 and 30. So I'm just gonna write 210, but it would be 210 and 30. And that would be it for this transaction. The next one would be on April 17th. For 17, we're just gonna do the same thing. Purchased 11,500 of merchandise on credit from Grant Company. The amount was 11,500. That would go in both these boxes because the journal entry would be a debit of 11,500 and a credit of 11,500 to inventory and accounts payable. Once again, we do not need to use the other account column because we are using inventory. The name of the company is Grant Company, and that's what we write in the first box. Now that we're all done, and we're just going to assume the month is over, we have to add up both columns. The amount would be $26,800. And since both boxes have the same amounts in it, it would be the same for both columns, 26,800. This is the journal. At the end of the month, you would have to post to the ledger. The accounts payable accounts, the individual ones, should be updated as it happens. But we have to make sure that the accounts payable main control account is updated with this amount. Then we would go to inventory and we would post a debit of $26,800. Once again, this frees up the ledger. Instead of having all the different entries and transactions listed, it would just be one at the end of the month. We have nothing for the other accounts, but don't worry, we'll have an example where we use that in another one of the journals. The next journal we're going to be doing is the cash receipts journal. We have on the 13th, we received payment from Paige Alistair from the April 3rd sale, less the discount. Be mindful that here on the 3rd, we did sell merchandise to Paige Alistair, and credit terms are 210 and 30 for everyone. That was on the 3rd. It's the 13th. They did pay within 10 days. Paige owed us $5,200, but there is a discount of 2%. So keep that in mind. That was something we had to do in the last test. A lot of people did get that wrong, but just make sure you're aware of it now. The other cash receipts entry we're going to be doing is from the 18th, where we borrowed money from the First State Bank by signing a long-term note payable. These are the two we're going to put into the cash receipts journal now. This is what the cash receipts journal looks like. We have the date column, account credited, cash debit. This account always needs to be used because this is the cash receipts journal, which means we are receiving cash. If we are receiving cash, cash gets a debit. Therefore, this one always needs to be used. If for some reason you're not using this column when doing an entry, it means you're using the wrong journal. We have sales discounts as a debit, accounts receivable as a credit, sales as a credit, other accounts as a credit, and cost of goods sold and inventory in one box. We're not going to be using all these columns every time, but we would pick which one. We're definitely going to use cash debit every time. And then why are we receiving cash? What's it from? And we would pick the appropriate columns. It's really good to think about what the original journal entry would look like and then find the right columns up top. On the 13th, we received payment from Paige Alistair for the April 3rd sale less the discount. Let's just think about what this journal entry would look like normally. The date for the original transaction will be April 13th. We received a payment. Remember, cash is always getting the debit. We received money from Paige Alistair for the amount they had owed from the April 3rd, which I have. This is the April 3rd transaction here at the top. Paige Alistair owed us $5,200. That entire debt is going away, accounts receivable, $5,200. But Paige Alistair is not giving us $5,200. There's a discount. Remember, 2, 10, and 30. There's a 2% discount. What's the name of the discount account that we use when you make a sale? It is sales discounts. 2% of $5,200 is $104. That's how much they're getting off. The cash amount would be how much Paige Alistair is really paying us. It'd be $5,200 minus 104. Therefore, it'd be $5,096 is what Paige would be giving us. This is what the normal journal entry looks like. It's lengthy. It takes up 3 lines. You have to remember all these account names. What makes the special journals easier is that all of these accounts are listed at the top. We just have to make sure we're copying what this would be. We have to make sure there's a debit to cash. We have to make sure there's a debit to sales discount, and we have to make sure there's a credit to accounts receivable. Let's put in the date of April 13th. Then let's find the 3 accounts at the top. Cash debit, sales discount gets a debit as well, and lastly, accounts receivable was the credit. These are going to be the 3 accounts we're using because they match up with what the journal entry should be. Cash had a debit of $5,096. Sales discount had a debit of $104. And accounts receivable, we had done a credit of $5,200. Like I said, we're not using all the columns, only the ones that make sense for this transaction. The amounts and the accounts do match with what the journal entry should have been. We're not making up new entries here. It really needs to match. The account credited would be, account credited over here would be the name of the person. In this case, it would be Paige Alistair. The next entry we have is on the 18th of April, 4/18. Borrowed $73,000 cash from First State Bank by signing a long-term note payable. What would this entry normally be? We're receiving cash. Why? Because we have a note payable of $73,000. It would be cash and then notes payable. That would be the debit and the credit. The debit of cash, $73,000, and the credit would go to notes payable instead of accounts payable. We look up top, we don't have an account that says notes payable. This means we have to use the other account. We'll be putting the $73,000 here only because we do not have a note payable account already at the top for us. In the box, we have to write in note payable so that we know what the name of the account is. Because other account is not an account name, it's just letting us know that it's another account besides the ones that are listed. So we do have to write in note payable here. Now that we're done, because there were only 2 transactions we had to do, we would add up all the columns and then post this to the ledger for these different accounts. Cash would be $78,096 when you add these 2 up. The other accounts are a little bit easier because there's only 1 entry. For instance, sales discounts is only $104. Accounts receivable is $5,200. And the other account is $73,000. We just have to make sure we post the $73,000 to the actual account notes payable. We would go into the ledger for cash, post the $78,000. We'd go to the ledger for sales discounts, and we would make sure that the accounts receivable control account ledger is also up to date. This would be the cash receipts journal. The final special journal would be the cash disbursements or cash payments journal. So I have them both listed here, cash disbursements, cash payments, because you can use them interchangeably. Some companies use one, some use the other, but it means the same thing. For the cash disbursements special journal, we have two that go here. On April 5th, issue check 588 to Knopf Company in payment of its April 2nd invoice less the discount, which means we owe them money and we are getting a discount on it. It comes from April 2nd here when we purchased $15,300 worth of merchandise. We will be getting a 2% discount. Remember what this journal normally looks like if you had to write it all out? The entry would look like this. The date would be April 5th. The debit would be accounts payable because we are paying off the debt we owe to them. We owed them $15,300 from the second. We will be paying them cash, but we will not be paying them the full $15,300 because there is a discount. Do you remember the name of the discount account when we had made a purchase? It would be the inventory account. Merchandise inventory. Because it offsets the cost of the goods to us. It was a 2% discount. 2% of the $15,300 is $306. Therefore, the cash that we're giving them is $15,300 minus the discount of $306. It would be $14,994. We need to put this into the special journal instead of putting it here, making this lengthy, taking up all these lines, and then updating the ledger. We're just going to instead use the special journal and making this process easier. We're going to use accounts payable. We have to make sure there's a debit there. We're going to cash to put this credit in, and then we'll look for the merchandise inventory account to put this credit in. First, let's begin by putting in the date. It was 4/5. Check number, that's easy, 588. It's listed right here for us. Let's put in these journal entries. First, we had accounts payable of a debit of $15,300. Let's look up here. Do we have accounts payable as a debit? We do right here, accounts payable debit. Let's put in our amount of $15,300. The next line I had was cash as a credit of $14,994. As a reminder, this is the cash payments journal. Therefore, this account right here, this column, cash credit, should always be used because a cash credit means that you're spending money, which means you're in the correct journal, cash payments, spending money. If you're not using this column for some reason, then it's because you're in the wrong journal. The last account I have is merchandise inventory as a credit of $306. Do we have inventory as a credit up here? We do. Inventory credit. We just write in 306. If you accidentally forget what the account would be, you can always look up top because it should be there. The payee would be Knopf Company. If that's who we're making the check out to, we'll just assume it is. Account debited, we would use account debit over here. We would write in Knopf Company once again. So a lot of times you will have the same company written in here, and sometimes you won't. If you're not using accounts payable, if you're using another account, then you'd probably have something else written in there. The last journal entry we have is from April 16th, 4/16. Issue check number 589, payable to payroll and payment of sales salaries expense for the first half of the month. Remember, you need to think about what the journal entry normally would look like. If we're paying our salaries expense in cash, it would be a debit to the sales salaries expense account and a credit to cash. Therefore, we need to make sure that we match up the appropriate account names at the top with what that journal entry would normally be. Like I said, it's normally a debit to the salaries expense account. When we look up top, do we have a sales salary expense account? We don't, so we'll have to use the other one. We'll put in the amount, $10,650, and we have to write the name of the account on the side. The account that would be debited would be the salaries expense account, or sales salaries expense. I'm just abbreviating because it's very hard to write with this. Salaries expense. That would be the debit. The credit would go to cash. And remember, we always need to use this column when using this journal. It would be $10,650. The payee would be who we're writing the check out to. It says payable to payroll. We would just write payroll here. Payroll. And then the check number would be 589. Now that we're done, we would add up the columns. When you add up the cash column, it would be $25,644. You would go into the ledger for cash and put this in as a credit. Inventory, 306. You would update that ledger account. Other accounts is the $10,650. We would make sure to look at the account on the side, which would be salaries expense, update that account. And lastly, accounts payable debit. We would need to make sure the subsidiary ledger account for NOF is updated, and then the control account is also updated. Those are the 4 special journals. We also have one other entry that we need to journalize. On the 23rd, we have an entry that goes to the general journal. Remember, the general journal is normal, just like you've been doing all semester. The debits and credits are on the separate lines. We received an $800 credit memo from Grant Company for the return of defective merchandise on April 17th. We need to put this return in, and we're going to do it into the general journal. In the general journal, the date would be the 23rd. When we originally made the purchase from Grant Company, it was merchandise inventory as our debit and accounts payable as our credit. Since we're returning it, we would just reverse the 2 accounts, do them opposite. Instead of owing them so much money, now it's $800 less. Instead of having inventory we can sell, we now have $800 less of that inventory, and we have to get rid of it. To get rid of the accounts payable credit we have, we would do a debit for that. Accounts payable, it was Grant Company. It's a good habit to start writing out the names of the people now, since it'll be going to the subsidiary ledger. Instead of inventory being the debit, inventory will now be the credit because we're getting rid of it. And it was for $800. There is nothing special about this journal. It is done exactly as you normally would. There's so many times I see students put an entry into the general journal and they're trying to combine the lines, put everything onto one line like the special journals, but that's not the case. This is 100% normal. The next topic we're going to talk about is technology and accounting. Some of this is just basic accounting information system overviews and definitions. First, we'll talk about off-the-shelf software. This is like QuickBooks, Sage 50, or other very user-friendly software systems that we can go online and buy or go to the store and buy. That's why it's called off-the-shelf software. It can be somewhat customizable, but not as robust as some other systems. And I do have a short video explaining some information about QuickBooks.
When you own a business, it's important to keep an eye on the health of your business. The most important information for any business is to see what you're really making and spending. You can get a summary of this right here on your dashboard. To get this information, connect QuickBooks to your bank account and credit card accounts and let QuickBooks do the work for you. You'll eliminate tons of data entry, and your books will always be up to date and accurate. You may have already connected your bank and credit card accounts when you first signed up for QuickBooks, but if not, you can still do that here. Once you're connected, QuickBooks helps you categorize the previous month's transactions. The first transaction you see is an expense. If possible, QuickBooks fills in who you paid and what it was for. You can change this information if you need to. In this case, office supplies is correct, so add it to your books. This is where QuickBooks starts to help you out. It found other expenses that look like the one you just added and has assigned them all the same category. If all this looks good to you, add them all. Now here's a check from a customer you deposited. QuickBooks categorizes it to a sales account. Add it so that you have a record of this income. If QuickBooks isn't sure about a category for an expense, it'll leave it as uncategorized. You can pick a category or choose Ask My Accountant to file it away to go over with your accountant later. Congratulations! Now you can see what you made and spent last month. Now that you've reviewed last month's expenses and income, QuickBooks lets you know if you have earlier expenses that need to be reviewed. As you categorize more expenses, QuickBooks learns from you so it can help. A transaction in green means QuickBooks recognizes that you categorized a similar transaction in the past, so it automatically assigns the same category for you. If you see a category in black, that's QuickBooks' best guess for how to categorize this transaction. If it's a wrong guess, just change the category and QuickBooks learns for next time.
Some basic terminology that will be discussed next. First, we have computer networks. These are links among computers giving different users access to common databases and programs. This is very common. For instance, at the accounting firm, we have a computer network set up on the different computers in the office. If one user goes online and does something to one of our clients' accounts, I can then open it and see it. If they save a file in a certain database, then I can also see that as well. So this is pretty common in businesses. Another item to note is integrated software. Once again, this is also common. Actions taken in one part of the system will affect other parts. And in terms of accounting, for instance, when a credit sale is entered, several parts of the system are automatically updated. If you go to the bank and make a deposit and then call customer service, which might be located in a different part of the country, they can look up the same information that you just did at your local branch. You can also go online and see your transaction that was made. It's all connected. When I use Ocean Connect to put your grade in, it then automatically updates the transcripts and student planning as well. So these are all integrated systems. Last point to note on this slide is Enterprise Resource Planning Software, also known as ERP. These are the extremely robust systems where the larger companies will use. It is a combination of kind of everything we just talked about. It's integrated, there's computer network set up, and it means that, you know, when you do a sale somewhere, it affects all these other systems, payroll, human resources, the receivables and payables, just everything gets updated at the same time. It's a massive computer network, a massive integrated software. A lot of times to install these ERP systems, it takes a couple of years to do so. Also, it can cost millions of dollars for companies as well. So these are very expensive. If you open your own little business, this is something you probably would not be getting anytime soon. The last point we're going to talk about is cloud computing, because this is still relatively new. A lot of programs and systems are still coming out with new cloud computing type of programs and systems for us to use. For instance, at work, we use a program called Lacert for doing taxes, and it is installed on the computer. Now, the same company has also made the same version of it. It's called Intuit Pro Connect, which is like the same thing, but instead of being downloaded onto desktop, it uses the cloud. So we can access it on the cloud. I can log in from any computer and I can access the client files that I have. Okay, so cloud computing is the delivery of computing as a service rather than a product. It uses applications via the web instead of installing them on one's own computer. Kind of like what I was just saying, like you can use it on your cell phone, your laptop, computer, tablet. For instance, using Canvas and using Connect, that would all be part of the cloud. You can use any computer. You do not have to install the program. Like I was saying, QuickBooks is also they also just came out with an online version. It used to be where you had to download QuickBooks on your computer and you can only use it on that computer. Now you can use QuickBooks Online and I can go on any computer, I can use my phone and I can access all the same information. And I'm sure a lot of you have things on the cloud as well. You can back up your pictures and videos using the cloud. I'm sure most of you use YouTube or Facebook, all of that's using the cloud. So this is something to think about if you are coming up with an accounting information system. You can use a manual system. If you're small, you can get off-the-shelf software, or you can use software that's based on the cloud. And this concludes the PowerPoint for Chapter 7. As a reminder, please make sure you have classwork Chapter 7 completed and upload it to give you credit for the attendance of today. Thank you very much. If you have any questions about the information here, the topics, anything involving this chapter, please send me a message or just write it at the bottom of your classwork and then I'll send you a response back. All right, thank you. Be safe, stay healthy, everyone. Good luck with what's going on out there.